So we had a very volatile end to last week, specifically between Thursday as well as Friday. As you can see here, we had a large gap up on Thursday. This was following the FOMC meeting that was on Wednesday. So we had a large gap up. So price opened a lot higher than it closed the previous day. However, it was a gap and crap scenario in this case. And what do I mean by that? Basically, we had a gap up, but it was unable to hold, so that's the crap portion of it. So we fell all the way down, which typically shows a lot of weakness and also typically shows a high likelihood of continuation afterwards, although we did have a gap up the following day. So both times we did have a gap up. This one actually held, unlike the one from the previous day on Thursday. So what's very interesting heading into this week are these three levels right here. Make sure to mark all three on your charts because they're going to be important. Let's start with 458.62. This is a key pivot level that I have. If we have a break above this level, we're going to see a lot higher price discovery, even though I still have that pullback thesis, especially into the middle of August. So this is the risk at the moment. If we have a break above it, then there can be more upside afterwards. I'd like to look for hourly candle close, at least for confirmation. So if the 1 minute, let's say, gets above, that doesn't mean that it's been confirmed that we'll see more upside. I'd like to be patient and wait for the hourly. That gives a little bit better of a confirmation signal. Now for the downside, 455.41 is a very key level to watch. This is where we actually had the double bottom occur on Friday. It also happens to be a previous dark pool print from last week. I shared that in the previous video we did on Wednesday. So this is a key level. It's a known dark pool accumulation zone with a lot of premium behind it, and also now is a known support level because of how we bounced on Friday. Also another dark pool level is this 453.22 level. So there's two key dark pool levels. If we are able to get below this over here and it's able to hold under, then we will see a lot more downside after that. So these are the two levels that bears at least want to see for further downside, and at least for bulls, you have one level to go before a lot more upside. So this is how I'm watching the start of the week, specifically between Monday and Tuesday, because one of these levels is very likely to break within that time range. So do watch for that, especially heading into early this week. Also, something else very critical is QQQ right here. This is a rough draft of a channel that we had been trading within since all the way back here on Monday of last week. So you can see we did trade to the top, acted as a resistance, fell back down around FOMC time, and then we actually gapped up above it, but it also fell back down afterwards. So not perfect price action. That's why I called it a rough draft of a channel. It's not a perfect channel where the top acted as a resistance every time and the bottom acted as a support every time, but still a channel nonetheless. And what's critical is we closed right on top, right on the resistance based on Friday's close. So it's going to be key to watch this level, specifically up here for a rejection down to this lower support if there is going to be a breakdown. Otherwise, if it gets above my red box here, it would also get above at the same time that SPY would get above this 458.62 level, which would mean a lot more upside. So watch both SPY and QQQ together. They're going to work in tandem with whatever direction they choose, whether that actually be to the upside with a break above this box here, or to the downside with a break below this channel, which would also happen around this price of 455.41. So I'm watching both of these very carefully between Monday and Tuesday. This is going to decide where the next large move in the market is. So watch these levels, are going to be critical. Also, something else that I've been monitoring is the dollar here. You can see we did have that confirmation off of this trend line, which I've been referencing in the last couple videos, and it's actually had a decent amount of strength, especially even last week, despite that gap up we saw on Friday. As you can see here, these two daily candles are fairly strong. We're above my 101.5 level, which is one of my first targets after the bounce that we had back here. Remember, this is the trend line, the weekly trend line at least, that goes all the way back to the .com bubble time period. So it's a very well established, at least through time, trend line. You can see it connects all the way from back here to the high that we made in 2020. And then also this is the first main retest we've done of it. So I expect there to be some residue strength, especially heading into August as well as September. And of course, with the dollar strength, you can see a little bit more weakness overall in equities. So that can have an impact on the rest of the market. But of course, I'm still going to continue to watch these levels here that I provided earlier in the video, at least for Monday and Tuesday of this week, because they will decide what direction price wants to go. Also, one more thing I do want to mention is the dark pool levels feature here on Cheddar Flow. We did have a 1.2 billion print based on Friday at the 456.95 level, as well as a 3.1 billion print. So we finally saw that 3 billion plus print that I've been looking for. I've mentioned that previously. Whenever you see over 3 billion in premium at a certain level in terms of signature dark pool prints, there tends to be a large move soon after. And we also had a lot of other prints beforehand that were in the 2 billion range. So those are definitely a decent amount of premium along with it, but we finally got that 3 billion plus, and this is at the 452.49 level. So we did close above it based on Friday, but again, like I said earlier in the video, I would like to see Monday and Tuesday of this week where price decides to go, and then we can base a judgment on this print. But this is just based on Friday. So 1.2 billion and 3.1 billion, a lot of premium for Friday. If we go back, actually, I'll just go back to Wednesday since the last time that I showed you the premium here, but we can scroll down. Again, I did just show this 1.2 billion in premium, but as we scroll down, we'll find the other days. You can also see here 3.5 billion in premium right next to this 2.5 billion print. The 2.5 billion one is the one that I already shared as this level, which happened to be right where we had the double bottom on Friday. But this 3.5 billion is from Thursday, and this is at the 455.37 level. So we now have two 3 billion plus prints back-to-back days, which is very rare to see. Remember, over 3 billion in just one day is a lot. Having it 2 days, especially back-to-back, is definitely eye-catching. So you're going to want to mark these levels on your charts. 355.37 as another one to watch, at least for early this week as well. Remember, I'm still watching these as my main prints, but notice 455.41 is right next to 455.37, right around that range. And this is exactly where we bounced based on Friday, like I just said before. So this area right here, right around this 455.40 level, can be very critical, especially if there's a break below. At the moment, it's acting as a strong support, as we can see from this double bottom, but watch this range right here, roughly 455.41 from that previous level, because there's a lot of premium tied to that level with multiple signature dark pool prints on different days right at that level. So keep that in mind. And of course, if we go back down here, you can also see more premium, and look at that right there, 4 billion plus print. This is a mixture of both signature dark pool prints as well as just normal singular dark pool prints. So it's not just signature, but the level still applies here, 452.49, very key level, because the amount of premium that we saw on that level is definitely eye-catching, along with the previous ones that I just showed you that are above 3 billion. So over 4 billion, definitely watch this level as well if we do end up falling back down to it. Still a ways to go, because if you see here, back down to roughly 452 would be about the low of day, right around this low of day that we had on Thursday. So still more room to go, at least for the downside. We have to break this level that I just shared with you before, the 455.41, in order to get there. But keep that in mind if we do reach that before my next video on Wednesday. So dark pools were very active last week, along with the market in general in terms of just volatility, and I do expect it to continue with that, especially to start off this week. So do keep in mind these levels like I shared earlier in the video, as well as QQQ. Remember, a break down below this channel means a lot more downside. Otherwise, a break above this box right here will mean a lot more upside. And by a lot more, I mean in terms of just tech, we will see a new high of the year if this box is broken to the upside, of course, with an hourly confirmation candle. Wait for that confirmation. That's going to be your best bet to, one, mitigate the amount of risk you take, but also to help confirm your thesis of more upside. And other than that, as always, appreciate you guys watching this video, and I'll see you guys next time on Wednesday.